Morning, ladies and gentlemen. Welcome to the BluGlass Meet the Management webinar. It's 11 o'clock Eastern Summer Time at the moment on Tuesday, the 27th of February. With me today, I have our CEO, Jim Haden, and our Executive Chair, James Walker, with us. We've had many questions. Thank you so much for all of them that have come in prior to this webinar. We'll attempt to get through as many of them as we can. You still do also have the capability of asking questions during it. You'll see at the bottom of your screen there's a Q&A tab. By all means, just click on that, type in the question, and we'll see it come up at this end and endeavour to get to that as well. We've got a short presentation that Jim will take you through, but then we want to spend as much time as we can getting through your questions. So, Jim, I'll hand over to you.
Thank you, Tristan, and thank you, everybody, for being here. As Tristan said, we'll try to go quickly through this presentation, answering maybe some of your questions during the presentation, but leaving more time for Q&A. So BluGlass has been building momentum, and 2023 really was an extraordinary year for us. As you know, we launched our first suite of products, and we got those into the market at Photonics West, and since then we've got traction from customers in each of our key verticals. And we've also were named a member of the U.S. Microelectric Commons, part of the NCSU Clause Hub, which is very exciting for us. We also with that won the largest contract to date in the company's history of $2.6 million. And then we continued to the vertical integration of our fab with the acquisition of GaNWorks Foundry. And we've continued to partner with industry leaders on our critical technologies that are of national significance. Also with the ME Commons, it allowed us to deliver record revenues in Q2 FY24. So the verticals that we gain traction in is in industrial, quantum science, biotech, and defense. We have multiple leading customers throughout those verticals in areas of quantum and scientific sectors, national labs, and research organizations. Recently, we announced that we entered an MOU with Applied Energetics. They're a leading technology provider in the areas of national security, with customers such as the U.S. DoD, Department of Defense. We are qualifying products across our portfolio, and we've now received our first customer repeat orders. And we are getting continued feedback with purchases from new customers, also the repeat purchase of our differentiated product offering. The U.S. DoD Microelectronic Common had a $2 billion earmark on the ME Commons, and this is the summary of the hub that we're part of. NC State is the leader of this hub. There were 8 hubs established, and our hub was awarded $3.4 million US in the first year. And out of that, we've got the Australian $2.6 million. There are 4 more years to this as we are in position to get those yearly increases. Plus, there's a call for projects. So this 5-year program is to establish the infrastructure and the capability for what the U.S. calls a critical technology, and that critical technology is deemed to be critical for national security and also security of our allies. And it's also the economy, the general economy, and we want to have access to it beyond just the laboratory values. And hence, BluGlass is the only photonics commercial off-ramp is what they call us in the areas for wide bandgap visible or UV laser diodes. So this is a strategic alignment to the roadmap that we showed to you and to the Department of Defense and the NCSU. This kind of project path is key to a company stand where we are in moving toward profitability. As I've mentioned before in my past, small startups that are able to get this kind of non-dilutive investment from large organizations like the DoD or DARPA, for instance, these projects help you to scale and you get quick bursts of revenue. And somewhere as the company advances, the products that you're investing in these projects eventually the revenue overtakes the revenue that you get from the projects. When I my first startup, we were about $8 million a year when I joined, and it was about 90% project revenue. And by the time we were at a $1 billion run rate, several years later, we're at about a 95% product revenue. So these projects are substantial to getting the reoccurring revenues that you would like to see. What to expect coming up? We will complete the vertical integration and the qualification and reap the benefits of that. We'll get continued repeat orders, but also to continue to go after projects. We've been invited to propose 2 additional projects to the Emmy Commons, and we're hoping that we will get that, and that will continue to then fund our growth of product and help us scale and move toward the higher value multiple function solutions that we've talked about at the longer wavelengths. So the tiered capital raise that we're in the middle and want to talk to has a lot of really attractive features. And basically, it's going to fund the phase or continue to help funding the momentum that we are here and have enjoyed in the past year. So basically, the launch of our first product, growing customer orders and projects orders, the vertical integration, partnered with the industry leaders. These funds will help us to scale the delivery and to build on this momentum. We will continue creating value for our customers and our partners, and we'll do that by the investments from this fundraise and also from the Emmy Commons. And we believe that this is going to be a significant opportunity for us to move toward the market that is forecasted of 2.5 billion in the visible lasers. And this opportunity for us comes through those verticals that we talked about. And as the approved supplier to Emmy Commons, with that project revenue, with this money that's coming in, we are going to continue to add the higher functionality and the higher ASP that you get with that. And it really will position us as a supplier of choice for this constrained industry. We believe that this is an attractive price and generous options. The SPP is at 3.7 cents per share with a short-term attaching option of 4.6 cents. Shareholders who exercise that option or those options will have a 1-to-1 bonus piggyback option that will be exercisable at 6 cents. So this extends our runway. It supports the company over the short and longer terms and really gives us the ability to execute on this growth and our technical roadmap. It also does something to increase the confidence of not only our customers, but also our vendors, because they see that we're a well-funded organization. So with that, we will open it up to questions.
Jim, for that overview. There has been a lot of activity the last couple of months, so that's good to get everyone on the same page. Just a reminder, I can see them coming through now. There's a Q&A function at the bottom of your screen. Put them up and we will add them to the list. We've got about another half an hour or so, so we'll get stuck into them. James, we might start with you if we can. We've got a couple here around the cap raise, and we've got the slide up on it at the moment. But I suppose let's start right at the start. Why the cap raise now?
So clearly, if anyone who looked at our 4C would understand that we would need to do something on raising new capital, and hence it was the right time to do that, raise that capital now, as compared to letting that drag out for a couple of months and therefore continue to put downward pressure on the share price. So it was deemed that we should do it sooner rather than later. Owning up here, we should have pressed the button a couple of weeks earlier, and I take that on myself as missing that. We probably should have started the capital raise a little bit earlier. That's on me, but very comfortable that we do the cap raise now, give surety to Jim and his team that they've got cash to actually execute on the plans. And with the way it has been structured, give the market confidence that we don't need, that we've got sufficient capital, and therefore, take off downward pressure on the share price, because people know that we will need to come back to the market in the short term. This structure allows and hopefully gives people confidence that that's not the case.
Yeah, you half answered the next question, I suppose, but around this structure. But can you just talk to, there's no concern around the options and the piggyback options?
Short answer is no, I'm comfortable with the structure. I mean, the structure does a couple of things. It allows investors to continue to invest and share the upside of where we think this company is going. It gives Jim and his team surety with a short-term option that he'll have enough cash to execute on his plans, and therefore rewards the shareholders as well. So the structure gives long-term surety for both investors that we're not going to have to raise money, we're not going to run out of capital, and gives Jim surety that he's got the resources to execute on his plans.
We've got a couple around director participation. Are you able to talk to the level of it in this one?
Yeah, so I can only talk for myself, of course. I can't talk for the other directors. I'm putting in only $10,000, as everybody would know. What I will say is that's not a reflection of my level of confidence in the company. I have invested in every round this company has done since I've been involved, which is over the last 6 years. I will continue to invest in every round if that's needed. It's more a position of my personal lack of wealth as compared to my lack of confidence in this business. I have complete confidence in Jim and the team to execute on this plan. But with this role and other things I'm involved in, it's only fair that I invest in this round, as I will invest in the other rounds of the other companies I'm involved in.
Does the board foresee a share consolidation this year?
Yeah, so good question. There are, and I know that's coming from a lot of shareholders. There are a lot of shares on issue, but I can say, we're more focused on growing the business this year than doing a share consolidation. I've seen examples where share consolidations work and where share consolidations don't work, and most times they don't work. So you have to really do those share consolidations around the time when there is good momentum in the share price. Maybe there's a few more institutions on the register, and there's good momentum in the business itself, that then would support a share consolidation being done without destroying shareholders' value. So not in the immediate plans.
Thank you. Jim, we might cross to you. We're getting quite a few questions around some of the technical capability and the latest progress. Wonder if we could start with a bit of a summary one. I'm going to try and summarize a few of them. What's the advantage to focusing on single mode and DFB?
Well, the advantage to us is that there's a lot of exciting markets there that are underserved by our competitors. Many of our competitors are focused on the high power markets and the industrial, and so we are seeing a constrained market there, and we have moved very quickly in our DFBs and our single modes to develop world-class products that can compete with anybody out there, and that is key. And another thing is we've talked about the two different types of markets there are. There are markets that are displacing existing lasers, and then there's new markets that are being created. The exciting world of quantum and AI, for instance, are growing technologies, quantum sensing, quantum computing. All of that is something that is in the early stages, so it's got a lot of runway to grow and to become very exciting and large markets. And so with the technological advances we've already made, and those technologies being deemed as very important for national security, for instance, they say that quantum computing is key to having great AI, and information is going to be very important in the future to keep us secure. Also, we continue to be bullish on our RPSVD technology and how it interacts with our different abilities, but we're also keenly aware that our competitors are interested in that. So we want to just say that it's a great way to utilize it, but we're going to utilize it to give us advantage when needed and not when needed, but we're not going to specifically release where is it helping us. But the DFBs, again, to recap, and the single modes are very unique. We've already developed quality that's world-class and across many of the wavelengths. We want to continue to expand those wavelengths, and it's going to enable new markets.
Yeah, this one's a follow on from that. You started to get into it just then. Can you provide an update on the reliability and the performance across the BluGlass DFB lasers?
As I said, the winning the contract like the ME Commons and getting that additional funding is really helping us to move forward and gain momentum. And also the customer feedback that we're getting is helping us understand where our performance is good and where we need to have improvements. So the basic update is we continue to gain traction off of in all four of our verticals. Our single mode and DFB products are world-class products now with our especially in the blue range, and we will continue to use the different technologies we have available to us to extend those wavelengths. And we continue to see also the growth in those areas and the interest from our customers.
What does the Applied Energetics MOU mean to the company? What was the reason they selected BluGlass as a partner?
Applied Energetics is a technology leader in advanced laser systems. They have what's called ultra short, very short pulses and very high energy, sometimes used in directed energy systems. So they have customers like the U.S. Department of Defense and other prime contractors in their area. They come in with a very unique technological advantage that is very different from ours, but also very useful. So when they looked at us and they see our ability to do different wavelengths, to have products like DFBs in our single modes, but they're even interested in our multi-mode products already as well. The reason is because that arsenal that we have, along with the different form factors that we were talking about, are something that they cannot get with another partner in the visible diode area. So the unique capabilities of both companies come together to allow us to go after new and exciting markets that neither company could do alone.
Two questions ago, but I'm getting a few in, so I'll try and hoover them up at this point. Can you elaborate on the role that DFB plays in the quantum computing and the possible revenue streams that might mean for us?
Well, the quantum computing uses crystals to basically manipulate the the ion states and so forth, electrons, and it's sort of complex, but I'll just say that nature dictates the kind of wavelengths and the light that is required. And many, if not most, of the wavelengths used in quantum computing require visible wavelengths to interact with the crystals that are being used to make these computers. And the traditional infrared lasers can't necessarily meet them, but also the traditional styles of lasers are huge. So I was talking to one expert in the industry, he said basically these computers are huge right now, and they take up full rooms like in the 1950s. And so with the DFB, as I already mentioned, there's thousands of units per wafer, and these are 2-inch wafers. So these are very small devices. So it gives the ability to scale down in size and up in volume relative to the benchtop huge or larger systems that are out there today. And so the first thing, I guess, recapping, is the DFB scale down, up in size. GaN is the wavelength that interacts with the crystals in a way that infrared light cannot.
What is the status of the RPCVD and tunnel junction applications at the moment?
Well, RPCVD continues to be a key part of our strategy, and we are using it to advance our devices where applicable. Again, we are a little bit aware of that our competitors are watching us, so I don't want to give you the exact details of where it's helping us, but it is helping us in our roadmap where we want to extend performance, extend wavelengths, and so forth. We've already shown our first UV, and we are now have lasing up to the aquamarine as we're moving toward longer wavelengths. And it's a technology that is key to helping us in those areas. And so we see that as it's like if you're going to golf, you want to have a full ensemble of clubs. So the RPCVD and the MOCVD and our other technologies that we're bringing in with the acquisition of the fab and GaNWorks Foundry, all of these things are coming together to give us the kind of tools that we need to give the market the kinds of lasers it wants in the form factors that they are requiring.
Also got one here on progress that is being made with the VCSEL products in the green wavelengths.
But we had a good contract in the first couple phases. We did very well with our customer, and we actually were able to share the data with a Fortune 500 company, and got a lot of interest. But at the moment, our customer is trying to secure additional funds to keep going. As you know, they're a startup. And so right now the project is on hold, awaiting funding.
A couple on staffing. First of all, can you give us an overview of what our new staff in the US are doing to fit in with operations?
Well, I guess to start with, the staff and the entire company is moving forward on our roadmap and to secure wins in these areas such as the ME Commons. As you know, without the US, we couldn't have won that. So the US was instrumental in getting the proposals out and bring in these kinds of interests. But also, if you look at the technologies, what we do in Australia is epi growth, and we provide those wafers to the US, where there's significant talent in the US, especially in California, in the wafer processing in the areas of, it was called Silicon Valley for a reason, right? So semiconductors are much bigger in the US than they are in Australia, and we have the talent there to processing them. So the people that we have in the US are doing the wafer processing, transitioning the epi-grown wafers to lasers, and then those lasers are shipped from California to New Hampshire, and they're going through testing and packaging and validation.
Another one on staffing. Do you think we are properly staffed in the lab to deliver this year?
You asked, are we properly staffed to deliver? Yeah, we have the right people in place. We have a highly talented team. We have many people with advanced degrees, and then we have others with Bachelor of Sciences in Engineering and so forth. So we've got the right team. We've got the understanding of what we're doing. As a matter of fact, in my experience, companies at this stage of technology typically have 2 to maybe 3 times the number of people we have. So it goes to speak to a little bit of how talented our team is. But if we look forward with some of the proposals we have going, that doesn't mean that we're not going to bring in new talent, because we will. There's going to be technologies that we need, and as we go through those roadmaps of the higher functionality sets, such as photonics integrated circuits, for instance, and multi-chip modules, those types, we'll have to either bring in more partnerships or more talent into the company.
We've got a couple here on cash flow. So does the company have plans to reduce cash flow burn in the next 12 months? Can you give us an overview of the general direction there?
From my point of view, the best way to reduce cash burn is to increase the upper line. And so we are focused right now on bringing in more incremental project revenue that's going to be sort of like a quantum leap, where we got 2.6 million, it led to a quarter record in revenue. And so we are in the middle of responding to a request for projects at ME Commons, and we will, we suggested as a company 2 or 3 ideas. Actually, it was 3 ideas of what we thought would be good based on our understanding, talking to customers and so forth, and what the US would want in their technology roadmap. And we were happy to see that all 3 of those ideas came back in what you call a call for projects. So we're working diligently with NCSU and other partners that we're bringing in to the fold to address those 3 applications and get them out there, and for us in two specific proposals. Those proposals are going out in the next couple of days, and we will continue to go after those. But also, if you look at the activities that we're doing to integrate the lab and in the fab in Fremont. Basically, what we are doing is we're increasing our ability to scale, and that scale comes with a couple of different things. It's not just making more, it's making better. So we will increase our yield, and that yield will decrease costs. Further, looking at the acquisition of GaNWorks Foundries, we're expecting that to lead to a $400,000 decrease in the expenses over the next year.
A couple on orders. When can we expect new customer orders?
Well, we're getting small orders here and there. They're not substantial orders, but we expect that to continue. At Photonics West, we had another year of really great interest. We had a booth where we had a small table. It was not uncommon for maybe Brad and myself to be talking to a couple execs at companies and talking about future of, maybe projects, products, roadmaps, those types of things. And there would be 2 or 3 people, customers coming separately to the booth at a time. And so, Steph, fortunately, we had people from our Fremont fab there to help Steph with those, because there was more people coming to the booth than what we had, just between the 3 of us, the ability to do it. So we had our site director up there for one of the days, and then Josh from our Silverwater, some technical folks that were there, and in between the technical talks, they were coming and helping us at the booth. So with that, we are also getting requests for quotes, and it's a process. You go for a request for quote, and then we put a proposal out, and the customer will come back. Maybe there's some negotiations, but we expect to see orders coming from those as well.
How many companies are still engaged in validating our products?
Well, we mentioned that we're engaged in 4 key verticals right now. We've got the industrial, we've got the defense, we've got the medical and biotech, and we have the sciences. And we actually have customers in each of those verticals that are sampling, testing products, and giving us feedback. We expect that to continue, and we're pretty excited about those. Those range from OEMs leading in areas such as medical, and also in the quantum areas, a good ability, quantum sensing and so forth. And then we also have universities and research labs that are continuing to order products.
And, can you give us an overview of, we've got customer feedback on products, so an overview of what they are giving you as part of their validation process?
Yes, we are continuing to get constructive feedback and saying, here's where we meet, and here's where we can use some help. For instance, sometimes the GaN devices are a little bit different than what they're used to if they are used to IR. So it's a 2-way feedback on how the parts could integrate into the system and handling and so forth. So we continue to get positive feedback and also constructive feedback. And both of them are very helpful, and will continue to guide our improvement path going forward.
One on the repeat orders. What's the suggested timing for those, and are we likely to expect delays?
I'm not sure if I understand. Could you repeat that?
It's fairly broad. What are the significant repeat? Where are there significant repeat orders? Are there any reasons for delays?
Reasons for delays. Okay, so I guess it's a 2-part question. I'll maybe address the delay part first, because I did talk about it. But if you're expecting higher levels of volume, as I've addressed, projects are where we're going to get the most traction right now, and that's where we're trying to get repeat orders, and that's going to bring in quantum steps in revenue rather than incremental steps. At a certain point, as the company continues to develop its product revenue, there's going to be a crossover point. When that happens, I'm not sure. So I think that getting this Emmy Commons is showing, I think that was a great advancement for the company, and it's given us not just the ability to grow, but it's also raised awareness of our existence to primes and other industry leaders that are now coming and talking to us. So we can expect that this type of revenue is going to lead to more more interactions and more orders from customers as we continue to move on this roadmap. And so so as far as the delays, and the repeat orders are coming from customers that are, in some cases, they wanted some custom parts to address, specific needs that they had, and they wanted another sort of customized part. And so it wasn't necessarily a repeat order of the same thing, but a repeat order of something else. And then we are also getting repeat orders like, we tried this and we want to try some more. And so those are the types of activities and engagements that we have at the product level as well.
I'm getting a few questions on AI at the moment. Which BluGlass products are likely to be in demand regarding AI? And do you have any idea of timing on this likely AI associated demand? And if you can explain fairly simply how the BluGlass products would add value to any sort of AI technology vendor.
It's a really good question. Yeah, it's a very good question. I was trying to figure that out. Unfortunately, when I was at one of the meetings at the ME Commons, I was there, and there are two leading quantum computing companies in the world, and they basically explained it to me quite simply. Those who win in quantum computing will have the fastest and best computers to do AI. Part of the way quantum computers are going to work, like I said, they're right now very, really big computers. The more computing power you have, the more people will be using them, and they could be used for national security type of things and other types of where you can do modeling and those types of things through AI, and those types of models will help to take advances. The more that you could do modeling for different processes or storms or those types of things, the faster you can do that, the more data that you can put in, the more data that you consume, the better the computers will be able to give you in your specific area, your technology where you want to make the advances. They can help show your roadmap. And so the way that our lasers address that, I went back to the question on DFBs. The DFBs are to scale down in size and up in volume, so we can make more quantum computers, but also they're necessary at these wavelengths to interact with the crystals that are making the quantum computers. So the link to our lasers and AI is through quantum computing.
A couple of questions on some of the big projects. When will BluGlass find out if it has been successful in being granted additional projects within ME Commons?
So the timing that we could think of, we can only sort of reiterate what we have been told. Again, I will just recap. We put in 3 ideas. We are happy to see all 3 of those ideas come back. So we're very encouraged by that. We are finishing up with NCSU, the proposals that are going out. All 3 of those came in the area of quantum, and we've garnered the interest of 2 major companies that are in quantum computing to help guide the roadmap and become part of our teams. Can't say who they are at the moment, but we're hoping that with this powerful team that we will be hearing positive news by May of this year. So we're encouraged by the progress so far, and that's the timing they're giving us. I think that in the May timeframe, we should hear back from contracts, and they're hoping then in the June timeframe we will be negotiating subcontracts with NCSU.
Are there further projects expected to come from Clause, and perhaps also any additional projects from the US CHIPS Act build out?
Well, the Clause one, we just said the last question was the proposals that are coming in from Clause. So yes, we're hopeful that that will continue along with the core. So we've got the core, there's a 5-year program, and slightly, like maybe 1 quarter offset will be the projects that will come in. We're proposing 2 projects that we hope will both get funded. We'll wait to see on that. We also have, there are interests, and we expect to maybe see more partnerships on revenue generating projects that come out of this. There are companies that would like to use the hub to order products, but there's also those who say, look, I want to get involved. I want to push this roadmap in a little bit different direction than where the ME Commons is taking you. Can we talk about having a partnership as well, and get another project out there? So we're hoping that through primes and through the contacts that we're making through the ME Commons partnership, we're going to have growing customer engagement.
So that's one for you related to clause. Why do we use the loans options via clause instead of raising additional capital?
Yeah, so I'm not exactly sure where that comes from. The ME Commons programs, the clause program, are not loans. They are purely non-dilutive capital. So they are treated as revenue on our P&L. So they do not need to be repaid. They are effectively paying us to develop projects, as Jim has already talked about. So non-dilutive capital, do not need to be repaid. And hence that's a lot better solution than trying to raise new capital, because capital is more dilutive, as everyone on this call would know. So CHIPS Act is a great scheme to fund our product development roadmap, which we're already working on. So non-dilutive capital, it's a great outcome for us. And hence these other projects that Jim's been talking about for the last couple of minutes would be exactly the same. They'll be non-dilutive capital if we're successful in those programs being funded and supported by the Department of Defense. And just like the first program under the ME Commons, we'll be able, if we're successful, we'll be able to announce the first year allocation. And we won't be able to talk about the future year allocations because the Department of Defense only announces the first year allocation. But these are long-term projects.
General revenue, Jim. Q2 was a strong quarter. Do you expect revenue will continue to grow quarter on quarter, or is it likely to be more lumpy?
Well, with the first year of ME Commons, we're so far the execution seems to be very good. So we expect that to be somewhat consistent through the next few quarters. We are hopeful that when we get these additional projects, if the news is positive there, that we will see growth. There will be some ability for other projects outside of ME Commons, and also we're hopeful that the engagement with applied energetics will lead to opportunities, maybe in the projects, but maybe also in some product positions. So, and then there will be small, we will continue to engage with customers and on the products, because at some point, like I say, we will be, the majority of our revenue will be coming from projects sometime in the future, just not in the very near future, because we hope to continue to get these big lump sum, what you call lumpy project wins.
One around pipeline. What are the protections in place around governance for the business to make sure there are robust checks, balances, and auditing with revenue and potential revenue that will support the confidence in the integrity of the pipeline?
So BluGlass is an ASX listed company. We have a board of independent directors. We go through an annual and twice a year audit process with Grant Thornton, who are a very reputable firm. And Jim has delegations of authority for himself and the team underneath him, which the board then manages. And as part of that process, the board meets on a monthly basis to go through those programs, to go through those spends, to go through the contracts and the revenue side, but also how you recognize the revenue under the accounting standards. So we do a lot of work in recognizing the rules on how you recognize revenue, the robustness of the pipeline, and the projects that Jim is talking about. That is the role of one of the roles of non-executive directors.
We had around clause in the US CHIPS Act before, Jim, but we've got some coming in around additional projects and proposals via the ME Commons, building on that last answer you gave in the submissions.
Yeah, so he's covered that to death, Tristan. for the shareholders, we've been asked to submit other applications for other projects under the ME Commons program. When you read ME Commons, you read clause, you read Department of Defense, CHIPS Act, they're the same programs. Under the CHIPS Act, Department of Defense was allocated $3 billion, which they then allocated to the ME Commons program, which was then allocated to consortiums, of which the clause is one. So I think we've covered that in a lot of detail today for everyone on these calls.
On Photonics West, what's the feedback on the launch and the demonstrations you did at Photonics West? And have you received any purchase orders?
Yeah, so I covered that a little bit. The feedback we got at the booth, continued interest. We had a poster board up showing progress in our DFBs and continued interest in the DFBs and also our single mode products across our wavelength portfolio. There are interests in the different form factors we have, TO cans and the even some interest in bar level products, which are very unique in this industry. And so that would end up being a project. But I guess the idea is that we are getting the interest. There was continued interest, as I said earlier, and there are requests for proposals. People don't go to the show to place orders at the show. Basically, what the process is, they come back with information, and they have to go through their purchase orders process to get approvals and so forth. And purchasing usually doesn't come from an engineer; it usually comes from someone in the purchasing department to ours, and then we will send a quote back, and then after we get the quote out, if everything's copacetic, then they will place an order. So it's a bit of a process to get that done. But we're hopeful that some of these requests for proposals will turn into they're either requests for proposals or just straight on quotes. Either of those can turn into customer orders.
The company had limited working capital. What are the benefits that the company got out of acquiring GaNWorks?
Well, first off, there's the technology that sort of finishes off an area that we had a gap in our fab, and having that under our control is one. But really, there are two great engineers that came over with it, and we immediately went through and said, "Here's some of the things that we had been trying to talk through the leadership of the organization." And there's always, when you're doing that, there's always a little bit of the telephone where you're not quite clear that the message is getting through to their engineers the way we would want it to, and so forth. So having it all under our umbrella inside our fab in Fremont has led to some very promising areas where we could not just improve the quality, but really significantly decrease the time that it takes to do these process steps. And we're also working with the equipment vendor to achieve those. And we had no access to the equipment vendor prior to this. So it's helping with that. And so technologically, we believe it's going to increase our quality, decrease costs through yield improvements, and it's going to also decrease the amount of time it takes to get stuff through the line. And as I already stated, one of the key things is the cost to us is looks like it's going to be on without the yield improvements. We put in at $400,000 a year is what we modeled it out before, and that's US $400,000. And so we believe we're on target to have that expense reduction moving forward.
Now that the vertical integration is complete, do you still expect to experience any fabrication challenges?
Yeah, so in this type of industry, it's high tech. You have a lot of different pieces of equipment, and just like keeping your house running or keeping your car running, or multiple cars if you have them, you have to sometimes take them into the shop and get work on them. We're going to have to do that with our equipment. And as you know, I've mentioned that we acquired a running fab. It was for 2-inch wafers, and silicon industry is already up to 12-inch. So a lot of the equipment that is used on 2-inch wafers are older equipment by definition, because as much of the industry has moved beyond that. GaN is a nascent technology for GaN lasers, and it's still at the small wafer sizes. So we will continue to have problems with equipment from time to time, and we have we have specialists inside the organization and outside of the organization that are helping us to address those problems as they arise. And stuff like as we talk about this this SPP and the follow-on options, this kind of money is going to help us to either improve or replace some of the aging equipment.
We're just about out of time. We've got time for one or two more. For those who've put questions inside, thanks very much. We'll endeavour to get back to you with answers if you've put your name to them. Jim, what's the advantage of doing wafer growth in Australia instead of the US, where the laser fab is?
Well, I'd say the advantage it comes from the team that we have there and the facilities, and that's where all of our reactors are. We have 5 reactors there, and a team of people that have been able in that period of time, with your help as investors, create a technology that is now producing lasers in a very short time. It may not seem it from an investor standpoint. From a technological advancement, though, in a very short time, the team in Australia has been able to work with our team in the US to create products that are in some cases world-class products. And so the advantage is that all of the knowledge and the past investments that led up to, and you were hearing things like micro LEDs. That same technology was applicable to the growth that we're doing for lasers. So keeping that expertise and the equipment from the team there is crucial to us, actually.
Right. We are out of time. So thank you for all your questions, but I'll just hand back to James and Jim for some closing remarks.
Yeah, great. So thanks, Tristan, and thanks everyone for your questions. We haven't got to all of them, but we'll come back to you after this session. What I will say is, we have made great progress under Jim joining the team just over 19 months ago now, with the fab coming online, products in the market. 2023 was our most successful year ever. That's not been reflected in the share price yet, but in terms of where we are in the commercialization of our technology, getting products in a market that has limited suppliers, our approach of being the nimble third supplier, providing multiple wavelengths in different form factors that aren't currently available, is working, and we are starting to get traction. And with the fab being acquired, and then obviously becoming part of the ME Commons program, we are in a good position to now execute on the strategy. What is missing and what has been missing is the capital to give Jim the time to execute on that. So hence the capital raise now, the SPP. What I will say, it is an SPP. It is not a rights issue. So at the end of when this SPP closes on the 13th of March, there is not a 3-month period to place the shortfall with anybody else. The SPP will close on the 13th of March. So we would really appreciate your support if that's where you are on your journey with BluGlass. We think we have made it attractively priced. So therefore, with the shares, with the attaching option, and then the piggyback option, we think we've made that attractively priced, 1, for the investors, but 2, to also give the company surety of runway to allow Jim to execute on his plans. So hopefully today has answered a lot of your questions about our plans and where we fit and how that fits into our overall strategy and the runway. But thank you for your time today. And with that, I'll hand over to Jim to close out.
Yeah, I would like to reiterate and say, thank you all for being here and for the support that you've offered in the past. And also want to reiterate what James says. It is really necessary and good for us to have a runway that our customers and also our vendors could look at and say, yeah, this is a company that's going to continue to meet its financial obligations. And these funds will be used to continue this momentum that we've gotten. And with the best year that the company has had in 23, we're hopeful that each year is going to now get better. So this will help us to scale both in projects and also product delivery to fulfill existing contracts, and then also the new contracts that we expect to get in the next coming years. So again, just thank you, and hope you have a wonderful day.
Thanks, James, for your time. You can now log off and enjoy your day.
Thank you.